Let's continue talking earnings and stocks with Grant White of IA Private Wealth in Winnipeg. We'll focus in now on shares of one of Canada's major gold stocks, Kinross Gold. That company also reported fourth quarter results. The stock is up in a big way over the past 52 weeks. And there's a look at the stock, up 141% over the past 52 weeks. However, it's also going on sale today, Greg. It's down by, Grant, I'm sorry, down by 7%. What are your thoughts on this sector and this stock in particular?
I mean, obviously, Kinross has done a really good job over the last year. I mean, I think they've been justifiably rewarded in the share price over the last 12 months, and especially year to date. I mean, I think we've seen some really nice gains in it. They've obviously benefited from the gold like prices as where they are today, and I think we were closing in on $3,000 an ounce, if I'm not mistaken. So, the company has benefited from the commodity price going as high as it has. I think management's done a really good job. We've seen nice debt reductions in the company. I think what's key for this company going forward is going to be managing costs while they still, manage expansion and growth and revenue growth. That's going to be critical to them going forward. I'm not concerned about the sell-off today per se. I mean, I think that what we're more interested in this space, in this industry, is really good management. And I think that Kinross has demonstrated that they have really strong management right now. They've got a good plan to execute. And I think they're going to continue to do well over time here. So as long as the gold prices stay, relatively high, I don't need them where they are today even, but as long as they stay relatively high, I think Kinross will continue to do well. And there's no reason to think that gold's not going to remain relatively high given the environment.
Where do you come down on the choice between gold exposure via buying gold itself or buying gold miners?
Yeah, typically for our clients and our investors, we are choosing the Boolean. I mean, I prefer that. And the reason for that is simply just because it's a little bit more predictable in our opinion. I mean, there's too many variables at play. When you're dealing in commodities, there's already enough variables given pricing and what's going on in the world. And, if we can eliminate some of that friction in terms of pricing related to mining companies, because there's a whole lot of things that can go wrong in a mining company, as we know, we like to do so. So we do err towards more buying of the Boolean, but that shouldn't take away from what Kinross is doing today and what kind of company it is.
Okay, West Fraser Timber, one of the big lumber producers, of course, in this country, a company that also could be on the wrong end of a tariff dispute between Canada and the U.S. As we know, the softwood lumber situation has been a minefield of trade disputes between Canada and the U.S. for a long time. That stock under pressure after results as well. What do you think of West Fraser?
Yeah, I mean, it's not a sinking ship, but it's got challenges, that's for sure. I mean, and the environment is not the least of which, obviously, given the tariff situation. And so, I'd like to see, we're seeing them shrink their losses, which is a good thing, obviously. But, what we'd like to see is we need that to be a reversal and get back into consistent profits, which is going to be a challenge given what's going on. And so we don't have this company really on our radar in terms of a buy today. They are heading in the right direction. Like I said, it's not a sinking ship anymore. It's starting to stabilize. We need to see a whole lot more of that for us to become interested in the company. And we'd also probably need to see a lot more clarity related to tariffs and trade going forward. And if we're able to see that, then that would be a move in the right direction, obviously. But also like just the environment in general. I mean, housing builds and not just in Canada, but, if you're looking overseas in Europe as well, we'd like to see a turnaround in those markets in terms of demand. And if we can see those things start to happen, then then we could see a turnaround in the share price. But for right now, it's not something that we're interested in. Okay.
Shares of Precision Drilling have slumped to very close to a 52-week low. That company has also reported results, and it has missed expectations, and the stock is down as well. What are your thoughts on PD?
Yeah, I mean, it's another one. It's not dead, but it's certainly on the ropes. I mean, I think we've seen a 90% decline in earnings year over year. I mean, they've really struggled because the environment in the U.S. has not been favorable to them. I mean, a lot of properties aren't doing the same amount of drilling. There's been a lot of wells shutting down, and that's hurt their business. And so, we're seeing a lot of challenges for them. And unless that can turn around, I don't see that we're going to get back to where we want to be and make this company a buy rating for us. So, again, it comes to these headwinds, and if they can't turn those around, it's not that interesting to us. They've had a lot of challenges. I see those challenges continuing on for the foreseeable future. And if unless some of those headwinds are removed, it doesn't become interesting to us.
Grant, thank you so much for joining us today. Great to have a couple of conversations with you.